I blew accounts for years. I tried every strategy, every indicator, every single Discord signal, nothing. Then I came across this one zone, and you won't believe, but money has been flowing in ever since. In this video, I'm gonna show you exactly how you can do the same, so stay with me. If you keep failing prop firm evals, if you keep getting stopped out by one tick and then price moving into the direction, if you've jumped between 5 different strategies here and nothing really sticked, well, guess what? I've done the exact same, and this video is for you. So by the end of this video, you'll know how to read order flow, find the zone that actually matters, and learn how to execute on that zone. With a stop and target, you can calculate before price even hits your zone. So without further ado, let's get into the technicals. Okay, so let me draw this out before I show you the real chart, because this framework is what changed everything for me. We have 4 different boxes, 4 steps. That's the whole model. You'll learn all of them today. So the first step of this trading model is market structure. What is market structure, right, guys? You're probably asking this, but I know a lot of you guys already know. Market structure essentially is lower lows, lower highs, lower lows, lower highs, and higher highs, higher lows, and higher highs, higher lows. Now, we have 2 different types of market structure. We have bearish and we have bullish market structure. As we said, whenever there's lower lows and lower highs being created, we are in a bearish order flow, a bearish market. Whenever there is higher highs and higher lows being created, we are in a bullish market. Order flow is just the market making lower lows and lower highs. Bearish, right? As we see here, it's bearish. Until a body closes above a protected lower high. That's what we call a flip. And that's basically your step 1. So you guys might have noticed the zone here on my chart that looks awfully suspicious, and that zone is called the SNDr. What the SNDr is the last swing or the last down move before a break of a significant high or low. That high or low has to be closed with a body closure. Therefore, the SNDr is validated. If there is a wick above a significant high or low, we just don't count the zone. This is not an SNDr. How we usually play this SNDr is we fib it, place the limit at the 50%, and kabam, clean 1-to-1 every single time. No hassle, just clean 1-to-1s all day, baby. Alright, so first thing, I read the order flow. And it's not really that complicated, right? It's lower lows, lower highs. We know that as bearish. But higher highs and higher lows means that it's bullish, right? Price is making lower lows and lower highs, bearish. I'm not looking for longs. But then, look at this. So we have this higher high, higher low, a higher high. We established a body closure. We flipped. Now we have a lower low. We have a lower high and another lower low. We close with a body closure above this protected high. What did we do? We made a bullish flip. Right here we made a bearish flip. Here we would only be looking for shorts, but right here when this flipped bullish, we would only be looking for longs. So there's one rule we have to pay attention to in market structure. We cannot counter when the swing count is less than 4, and we cannot take continuations if the swing count is over 4. So right here the swing count is 2. This is this second swing. Look at this SNDr. Would we take this continuation SNDr to go higher? Yes, we would, because the swing count is 2. Here the swing count is 3. Would we take this continuation SNDr as a trade that could possibly run higher? Yes, we would, because the swing count is not yet. Now, here's where 95% of the traders go wrong. So after that flip, they chase. They FOMO in right here. And they get stopped out when price retraced. And price goes to their target without them. You know this feeling. I know the feeling. I lived it for years. Here's what you actually do. So after the closure of a protected high, you look back and find the last down leg before that break. That swing right here, we already marked it as the SNDr, the supply and demand zone responsible. That's the zone responsible for breaking that protected high. That's where the real orders are sitting. That box, the SNDr zone, not some random support level, not a previous high, not up here. as most retail traders would assume. So now I take my fib tool, right? I fib the last down move and I look at the 50%. Not the equilibrium, not some fancy concept, it's just the midpoint of the zone. That's where my limit order goes. We place the stop under or at the bottom of the zone to the tick, not rounded, just to the tick. The target goes on the top of the SNDr. You can also target other things. You can target 2R, whatever you want, but make sure to backtest that concept. But otherwise, that's a clean 1-to-1. You know the risk before you click. You know your reward before you click. You don't adjust, you don't move the stop, you don't close early. Follow the rules. Now, let me show you this exact setup on the Yankee chart. Real trade. So right here we have our higher high. Now we have our higher low. What price did? Higher highs, higher lows, higher highs, higher lows. The last down move. We know that the order flow is now bullish. I look back, I find the last demand swing before that break, just like shown here. I box it or place the fib on it. I set the limit at the 50%. I place my stop directly on the low of that swing and target at the top. And then I let it work. I didn't move my stop lower. I didn't move it below this swing. I didn't close early because I got scared. I followed my rules and it hit. This was the first $6,000 I ever made right here. This trade marked that milestone. So that's why I'm showing you this entry right here. And this is not a one-time thing. That's the first thing I need you to understand. Let me show you another one. So same model, same concept. We have bearish order flow, right? We have bearish order flow. We closed below the protected low with a body closure. This can also be taken as a continuation trade. So mark the SNDr, fib it, place the limit at the 50%, place your stops behind the zone, and target a 1-to-1. Every single time, when you follow rules, it will hit that 1-to-1. One more, because I want you to see how this is a repeatable edge, not a lucky trade. So we have us moving higher. This is obviously bullish order flow. We have the SNDr, we have the 50%. I entered on the 50%, and boom. Not only did it deliver a 1-to-1 seamlessly, but it delivered way more. That's how it works. On the daily, 4 hour, 1 hour, 5 minute, 1 minute. It's fractal. The model doesn't care about your time frame. It cares about structure. But here's what I really want you to hear, because that's why I made this video. The zone, the SNDr, the 50%, the 1-to-1, it was never my problem. I had strategies before this. I even had this exact model before it worked for me. But you know what was really killing my account? It was me. I'd see the setup, I'd place the trade, and then I'd move my stop because I got scared, or I'd close at 0.5 hour because I didn't trust it, or I completely skipped the setup and second guessed myself, and then watch it hit the targets from the sidelines. That's what was blowing my accounts. Not the strategy, it was breaking my rules. The moment I started following them, but actually follow them, every single trade, everything changed. Everything changed. The payout you saw at the start of this video came because I had rules and I followed them. So I'm gonna say this one more time, and I really need you to write it down. Follow your rules. If you want to go deeper, I host live daily trading sessions. If you want the full SNZCE framework breakdown, you can join my free Discord down in the description below. No course, no upsell, just the model, and a community of traders actually using it. Come on in, watch a session, and ask questions. They're welcome. That's where the real work happens. Drop a comment below if that helped you, and I'll catch you in the next one.